What's up, folks? I hope the audio is working. Let me double check. Um, okay, perfect. Should be fine. So, bro, come on. Okay, I would say let's dive right into the charts, shall we? Okay, let's go. So as you can see, we are already on the daily chart, and we've been rallying for several days now. We took out this major low. So, yeah, we attempted to reach up into this daily fair value gap, but as you can see, we've failed to get there twice now. We weren't even able to take out this high here, but we took these two relatively equal lows. So, yeah, price already retracing, and yeah, I think that's what we should expect for today's New York session. I would rather look for lower prices. We definitely got to monitor this discount wick and the gradient levels. The nearest fair value gap on the downside would be this one. So yeah, we have an order block right here. Price already used it here and respected it. Yeah, so we gotta see if this order block holds price higher or if price wants to disrespect this order block and come all the way down into this fair value gap. But we also need to be aware of this inverse fair value gap. So this is kind of strong order block. We have retracement down into previous busy bullish fair value gap, while also respecting the high of this inverse fair value gap. So yeah, we have a couple PD arrays that should hold price higher. I don't know. We are kind of 50-50 in my opinion right now. I'm rather neutral. We have a buy side imbalance on the upside, a buy side imbalance on the downside. Yeah, trading still inside of this weekly volume imbalance here. So how we trade in there and use the quadrant levels of this weekly wick also should be kind of telling for us. So yeah, I guess as long as we are in the lower half of this wick, we could see lower prices down into this order block and this inverse valley gap. We need to see and analyze how prices then trading inside of these PD arrays that I outlined so far. Yeah, just gotta see what New York's going to provide us with. If you view it as a market maker buy model, because we took out sell side liquidity. If we grade this price swing from high to low then the 75 out of the 0.75 level would be low hanging fruit in a make a buy model or sell model. Okay, so low hanging fruit definitely delivered, took out the high and failed to trade up into here. So yeah, I rather expect like maybe a deeper retracement down into this fair value gap, or at least into this inverse fair value gap here, inverse fair value gap high, order block open. Yeah, let's see. Let's drop down into the 1 hour chart. On the 1 hour, you can see we have these obvious relatively equal lows. Okay, so as you can see, we also have relatively equal highs. This is also a reason why it's kind of difficult to say what we're going to do, because yeah, that's a scenario ICT defines as low probability, because whenever you have high probability relatively equal highs and lows at the same time and you're kind of in the middle of the range, it's difficult to say, okay, is price going to take out this high, these relatively equal highs, to then take out these relatively equal lows, or is price going to take out sell side first and then go to buy side, or it's hard to tell what price is going to go first. So yeah, but I tend to lower prices. Okay, gun to my head, I would rather say we see some retracement, some deeper retracement, but yeah, difficult. Definitely got to monitor this 1 hour volume imbalance, which is also a new week opening gap, just as I almost forgot it, just as this daily volume imbalance is also not a new week opening gap, but a new day opening gap. Okay, so there's a tiny little fair value gap, volume imbalance right here, and as you can see, price is kind of spending much time inside of this volume imbalance. Okay, so yeah, since we are trading in a micro Nasdaq, let's just check out the Nasdaq if it looks the same. Probably does. I'm just only interested in if we have, yeah, okay, there's also a tiny volume imbalance here. Interesting. Okay, also took these relatively equal highs, failed to get up into this volume imbalance, daily fair value gap, bro. Okay, yeah, looks the same, like MNQZ 2025. Sometimes they are slightly different. Okay, it's not mark to market 100% the same. So yeah, okay, definitely are in a premium, so a retracement is likely, and we are anticipating a deeper retracement. Okay, so we can delete this, and we can also yeah, I guess we can yeah, okay, let's monitor this one, this one. Go back into intraday chart, 15-minute. Let's put on the sessions indicator. Let's drop down to 5-minute. Okay, so definitely draw yesterday's PM session low. That's definitely sell side liquidity pool. So we are going to mark this out. Let's delete the daily wick. So we have sell side. here. Sell sites slash yesterday's PM session low. Buy side yesterday's PM session high. Perfect. And we have London high, but let's go back into the 1 minute chart. So let's mark out it's too much on the chart. So we also have pre-market relatively equal highs. Okay, yeah, took our pre-market high. Maybe, no, we wait. Maybe we form a short-term low here. We have then pre-market low. Yeah, these are the important, pertinent liquidity pools for today. Now you see the RTH. Okay, so we have a discount gap. Yesterday closed 4:14 p.m. here, and we are trading around here right now on the electronic trading hour. So yeah, we have a discount gap. We are probably going to use Friday's opening range gap levels, so we definitely want to also monitor this opening range gap. So yeah, this is something you want to have on your charts. I'm going to delete this because otherwise it would be too much on the charts. But yeah, so yeah, I mean, during London today we already manipulated buy sides. We took all these highs here, broke down lower, so today's trading profile is likely to be London high and New York continuation profile, I guess, because on daily we are rather looking for down close day, deeper retracement. So I guess the high is already set, and we are likely to see a New York continuation profile. So if that's the case, yeah, pre-market low. Yeah, let's see. 9:30 open, so close to open. Make sure you anchored it to the close of the 4:14 p.m. candle, so you don't want to take the low. 4:14 close and 9:30 open. Okay, trade up into midpoint. Actually, failed to trade up to the midpoint, and now we break lower. Okay, so that's a sign of weakness, and as you can see, price is accelerating to the downside. Yeah, I didn't finish my sentence, so I don't know how likely it is to see a manipulation of these highs when we are in a continuation profile. I don't know. My experience is telling me this is like too far away. If we are actually bearish and it is a continuation profile to the downside, that's too far of a premium. Okay, so we took out these minor buy side liquidities. Actually, we left relatively equal highs. I don't like that. This is too clean. I don't know. Difficult. I don't know. I don't know. Hmm. Okay. Yup. Yeah, I think we. I don't. I don't think that we use this as a manipulation for a market structure shift all the way higher and then looking for even higher prices to the upside. I guess that's, yeah, as I told you guys, just a continuation to the downside. Let's make some profit, boys. Let's go, Asterion. Oh, bro, where's Asterion? Where are you, boy? Appreciate you here. Okay. So, okay, price wasn't able to close below it. We just wicked down to the sell side. So I would like to see price manipulating these highs here. That's too clean. If we manipulate buy side here and let buy side here intact, and then we see market structure to the downside, we can view this as unfinished business and maybe look for a short opportunity. Okay, used first percent fair value gap here. Okay, and we can delete pre-market low. First percent fair value gap, include the volume imbalance. Okay, let's see. Yeah, as I told you, if we take out this high, remember on electronic trading hours, there's also another high, as you can see here, high, relatively equal highs. If we can take out this high and maybe leave a portion of the opening range gap open and have a market structure shift to the downside, that would be something I would be maybe interested in. But we have 10 a.m. news, and I actually don't want to trade before 10 a.m. news. So if it happens before 10 a.m. news, I don't know if I want to take it. My rules say don't take trades before 10 a.m. if we expect 10 a.m. news, which we are, which we definitely we expect, like a red folder, high impact, jolts opening, whatever. I don't know. High impact news driver. Okay, so we are above the first percent fair value gap, and using it as an inverse fair value gap, we are likely to trade up into the opening range gap. Using upper quadrant or first percent fair value gap. It's cold. Yeah. We are above first percent fair value gap, so likely to see a retracement higher into opening range gap. Give me a second. Okay. Okay. Let's see. Okay, interesting. So if price takes out this low, leaves a portion open as I told you, and we have a market structure shifted downside, we can still frame a narrative, a bearish narrative, and view this as unfinished business and use it as sell side. But if price trades above the opening range gap, we are definitely likely to see a buy side liquidity sweep. And in this case, I don't know if I'm holding on to my bearish buys then, but this needs to happen first. So yeah, I rather see lower prices, but as I told you, if we inverse this opening range gap and trade above it and close above it, that's not too bearish for me. So ideally, we want to see a portion left open, or maybe trade up into the high, reject from here off of the opening range gap high level, and then move lower. So yeah, we'll see. Definitely took out buy side here. Minor buy sides taken. Am I the market maker? That's a question, bro. How can I fucking know this, bro? Come on. Come on. Come on. Like I predicted it. What's up, folks? How are you guys on TikTok? We have 3 people watching on TikTok. Yes. So that's definitely. Do we take it? That's a short opportunity there, but bro, my rules say don't trade ahead of 10 a.m. news. So are we aware of it and disrespect my rule? Because there could be a little scalp just from the opening range gap high to first percent fair value gap. But we have 942. We are expecting the macro, and yeah, I don't want to be too. Yeah, we still have like more than an hour left. So, but there could definitely be a short opportunity, just like this. There could be a scalp. We'll see. We'll see. So we took a buy side, and the reason why that could be a short here is because we only were able to wick higher. Bodies closed at the consequent encroachment midpoint. Hmm. So if we were in a macro time window, 950 to 1010, I would be taking this trade. But now I don't want to disrespect my rule while not being in the key time window. So yeah, let's see. There's your scalp opportunity. Don't worry, it's not the first or the last. It's not the last trade for today. Not the last trade opportunity. Mm-hmm. Mm-hmm. 9:45. I'm definitely contemplating with taking this trade right now, but rules are rules, guys. Rules are rules. And still plenty of time left. But why I'm still confident? Close here, midpoint, waking up into the upper quadrant, but look where the body's close. This fair value gap is left open, like a little portion, and we are still just wicking into the opening range gap low. There's also a tiny volume imbalance, I guess. Yes. So yeah, more likely to see lower prices now. But yeah, we should actually see speed here, and you see the wicks to the downside. So that's, I don't know. That's why we don't take the trade. We are not in a macro time window. And yeah, let's see what happens. Okay. So trade up all the way higher into this fair value gap. Definitely not necessary if we are in fact bearish. So that's not too much of an bearish price signature. So yeah. What is interesting though is this one. Okay, so okay, no. As you can see, that's the reason why we didn't trade lower. Price was trading inside of this new day opening gap. I know it's too much on the charts right now, but I want to show you guys why price was only wicking lower. If price even closed below the new day opening gap, we definitely would have made it to the first percent fair value gap. But that's also another reason why I didn't took this trade. Okay, we directly have a new day opening gap below the opening range gap, so kind of too many reference points for the algorithm to refer to. So yeah, we just want to give it like the first 30 minutes and wait for the news and wait for the macro. So definitely right decision not to take this trade. But if, as you can see, price that trade would be still trading inside of this new day opening gap. So we want to close below it. Yes. And there it is. Okay. Okay. First trade. Okay. Still inside new day opening gap. Only wick lower. See, we didn't close below the new day opening gap. New day opening gap that I showed a couple moments ago. So yeah. Hmm. 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 Come on. Sorry, guys. Okay. Um, yeah, still going sideways. Waiting for 10 a.m. news. 10 a.m. news in 9 minutes. 9:50 to 10 a.m. macro starting. Still relatively equal lows here. Unfinished business. Portion of opening range gap left open. So we still want to see it stay open, like I told you and outlined beforehand. Price still using this fair value gap or this inverse fair value gap. Okay, price stays inside of it. Mm, yes, sir. Hmm. Let's see, what is ES and Dow doing? Bro, what the fuck? Okay, so NQ is the only one, the only weak in the C. ES is rallying higher, taking out pre-market highs. Dow also moving higher. Bro, he's not only moving higher, bro, he's just gone. He's skyrocketed to the upside. So, okay, interesting. Definitely interesting. Definitely interesting. Okay, yeah, S&P looks more bullish than Nasdaq on a daily chart. Let's see. Also, we could also see S&P take pre-market highs, and NQ fails, going higher. Then we would have S&T. Dow, whatever. Dow is not too important. Of course, if we look for low prices, we don't want to see Dow moving higher. That would be a deep coupled market, and we don't want to take trades during a decoupling. So yeah, I don't know. If we go to MES, or bro, I could just change it here. Ah, perfect. MES Z, as you can see, ES took oh ES took pre-market highs. So if we see a market structure shift to the downside now on ES, while NQ stays weak, that would be definitely something supporting our bearish idea, and would also show that NQ is the weakest indice of them. So yeah, that would actually be a perfect setup. Yes, taking out pre-market highs, NQ doesn't. NQ is weak. Then market structure shifts on to the downside on ES, taking out these lows, closing strong, moving lower towards these lows. Okay, beautiful. ES has beautiful, relatively equal lows to the downside. So this is rather manipulation to the upside. Whatever Dow was doing, I don't know. I don't care. So yeah, let's see what happens. Thank you. Whatever. Moving sideways. Hmm. 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 Okay, looks like ES is accumulating above pre-market highs. Dow is now also having a little retracement. Let's see. NQ definitely refuses to go to the upside. Hmm. Bro, Nasdaq is still inside the new day opening gap. Okay, so if price, as long as price stays inside of or between the opening range gap and the first percent fair value gap, I'm kind of not interested in taking a trade. So if we go higher, above, and close above the opening range gap, we may see even a continuation to the buy side. But yeah, I don't want to concern myself with that scenario because yeah, I rather look for lower prices for NQ. So if I'm taking a trade, I rather want to take a short, and if I'm taking a short, I want to take a short when price is below the first percent fair value gap. Okay, so I don't want to take a short as long as we are above the first percent fair value gap. Okay, and as long as we are in between here, between opening range gap and first percent fair value gap, no trades for me. And yeah, I actually not looking for high prices now. So yeah, I definitely want to see that stay open, that portion of the opening range gap. Let's see. Hmm. It's kind of difficult right now because I show you. If we go to the weekly, if we go back to the weekly chart and we grade this weekly volume imbalance. And then we go back to the 1 hour chart. You can see how price was only able to wick lower, take out this sell side, but look where the body's close. Okay, the body's close above it. That's not too bearish. First thing. Yeah, same thing. Okay. That's not too bearish. Another thing is that we have this daily volume imbalance. And same thing here. If you go back to the 1 hour, price also used this 1 hour daily volume imbalance, which is a new day opening gap, and price also closed above it. So yeah, we are 50-50 now. And yeah, still, as long as price is inside of this range ass price action between opening range gap and first percent fair value gap, yeah, not interested at all. So let's get back to the 1 minute. Maybe you can check out the 5-minute chart and see. Okay. Maybe bias is wrong. I don't know. Go back to the 1 minute. Okay. Let's see. Hmm. Mm-hmm. So that candle's rejection block caused this. Reaction. So let's see. Okay. Definitely not looking for longs. No, 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 no. You cannot convince me we are looking for high prices today. Oh boy, oh boy. So, yeah, let's see. Inverse for value gap here. Holding price lower now. Respecting opening range gap midpoint. I don't know. These highs are kind of too. They are in close proximity. So, took out this minor buy side here. These buy side pools here. Got rejected off of the regular trading hours. 3:59 p.m. candles rejection block here. Weren't able to take out PM session buy side. I don't know. I think buy side is still in play as long as we are in this area of price action. If we go down below the first percent of value gap, we may see a continuation lower. But yeah, nothing you want to trade, guys. Okay, that's not a short. We have buy side right above, so still 50-50. 50-50. Bro, I had this kind of price actions Makes me mad, bro. Come on. 40 minutes of just sideways movement. Come on. Come on, come on. Okay, so yes, took buy side, we had a market share shift lower. Okay, so if you compare it to Nasdaq, you see the SMT here, high, high, high. Oops. And we have these highs and a higher high. Here we have a lower high compared to these highs. Okay, so SMT between NQ and ES. I don't understand the people who trade only off of SMT and think like SMT is like the oracle. Like, I don't know, or SMT is too overrated. Also, ICT said, bro, SMT is just a cherry on top. Okay, if you have all the confluences on your side and you have SMT, okay, SMT's only like telling you, okay, it's going to be an even faster run to downside or buy side, depending on the narrative and the scenario you are in. Okay, so for example, if we have the situation like we have now, ES did create a higher high, while NQ failed to make a higher high. That just indicates and shows us that NQ is even weaker than ES. Okay, so that tells you that NQ has or is more likely to be moving more more quickly to the downside than ES. It's just a weaker one. Okay, that's how you need to see SMT. Okay, so Dow also moving lower, kind of looks like S&P, but more exaggerated to the upside. So damn, ugly as price action. Come on, come on, come on. Bro, I just gotta show you some balling skills. That's too boring. Okay. Where's the football? Bro, come on. That's the wrong one. Nope. Aha, there it is. Below the desk. Perfect. Okay, give me a second. Up. I don't know, guys, can you see me? Okay, let's see. Okay. One in a row. Okay. Another one. Oh, fuck. Close. That was close. Okay. Okay, maybe we see some speed now. Do we? Come on. Come on, buddy. Let's go, buddy. Okay, no. We just got tricked. What's up, guys? Sashin Lumba, how are you? Okay, no, he left. Uh, bro, streaming in the beginning is kind of frustrating. Bro, I'm talking to myself. Okay, whatever. No problem. No problem. It gets uploaded on YouTube, so everybody's not interested now. You can watch it later. Yeah, gotta be honest, this price action is just boring. I wouldn't be watching a streamer right now either, so whatever. I don't know. That's just December price action. Bro, December price action is awful. Definitely awful. Hmm. 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 Ah. Bro, everybody's who's in a short or long right now. I'm sorry for you guys. Okay. Maybe I should show you some more bowling skills. Okay. Ah, bro, that was bad. That was bad. Damn it. Bro, I lost it out. Ah. That's some grade A bullshit. right now. This price action. Bro, this price action is playing with my emotions, bro. Every time you see this wake to the downside, you think to yourself, oh, bro, come on. Now you gotta move. Psych. Still going sideways, bro. Ah. Maybe we should play some games or whatever. I don't know. 10:23. Bro, if this goes on like this for another 40 minutes, bro, not with me. Dow looks way cleaner and has a way cleaner price action than ES and NQ. Bro, NQ is even uglier than ES. And Dow is just beautiful. MYMZ. Bro, look at this. Why is NQ not looking like this, bro? Come on. That was moving. Definitely. Go back to NQ. Yeah. Okay. 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 Nasdaq. Come on. Come on, boy. There you go. Come on, please end this trash ass price action. Close below this opening range gap. Bro, I don't know how many guys and girls, traders in general, got stopped out here. That's ugly. Ugh. I think in December it gets even worse as we approach the holidays. Huh. 10:30. Bro, NQ's playing with me. Come on, boy. Huh. Okay. Breakouts out of the opening range gap to the high. Close above the high. Yes. No. Okay. Still inside opening range gap. Do we see it close above? Mm. Hmm. Hmm. Still inside the opening range gap. Yeah, good. Rejection block. Here. To the tick. Okay. Let's see. Let's see. Okay. So daily fair value gap. Price took out this buy side here. Failed to trade up in here. That's weakness. What happens? Crash. So downside took out the sell side. New weak opening gap. Huge premium gap. Indicative for strength. What happens? Huge up close candle. Immediate rebalance. Bullish price signature. Suspension block here. Not even traded down into. Another suspension block. Here, traded down into fair value gap here from low to high. Midpoint got rejected to the upside. And yeah, we kind of lost the strength, okay? We always traded up higher, but we didn't close strong. And we always had a wick on the upside, as you can see. Here, 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 here. So right now, if we stay like this, we have a swing high. What is the swing high? Swing high needs 3 candles, okay? We need a high with a lower high to the left of it and a lower high to the right of it. And we have a low, a high, and a low. Okay, so that's a swing high that formed after we've taken out buy side and failing to go up into daily fair value gap. So we also have this rejection block from the highest up close candle, which is this one in this price area. Okay, if we extend this candlestick's closing price, which is a rejection block, as you can see, price got rejected here, price wicked higher, but look where the body stopped. This body stops exactly, or maybe it's just coloring it outside lines a little bit, but it's more or less closing here at the same point which this closing price is, okay? So we had a premium gap higher, which retail traders might think that's bullishness. Yeah, where's your bullishness? We wasn't even able to take out this candlestick's high, okay? So failed price run into a daily fair value gap. Okay, didn't happen. This high stays intact. Fair value gap still not traded to. And yeah. Yeah, that's it. Like I told you in the beginning, inverse fair value gap, okay? Price is in between this bearish fair value gap, CB, and this inverse fair value gap, okay? Price is trading just between these two fair value gaps. And yeah, as long as we are between, we may expect some further sideways movement. I don't know, price action already looks kind of ugly here. Wick to the upside, wick to the downside. Next day the same. Huge wick to the upside and downside. So intraday still being ugly. And throughout the day, we didn't have too much of low resistance liquidity runs. Okay, sorry, again, regular trading hours. Let's go back to electronic trading hours. If you see, just look into the past and look to the left. This is ugly. This is also ugly. Okay, we loosen up a little bit in here, but that's ugly too. Okay, that's this price action is okay. I don't actually know what happened here. I think we weren't expecting any news, so that's a huge 1 minute candle out of nowhere. So yeah. I don't know. Typical December price action. I'm right back. Ah. Still nothing happened. Oh, that's crazy. Crazy, crazy, crazy. Huh. Mm. Okay. Finally, close above. So, yeah, buy side is in close proximity. Okay. Buy side taken. Still buy side resting in here. Bro, come on. Okay, PM session buy side taken. Electronic trading house buy side right above. Okay. Electronic trading house buy side. Pre-market buy side taken. So yeah. Oh hell no. Macro starts in 3 minutes. So we actually have a balanced price action if, okay, no we don't. Yeah, I want to say if we form a SIBI here, then we would have taken out buy side with a busy to the upside and a SIBI to the downside. Okay. Oh, okay, bottom imbalance on the lower side. So that's a balanced price action. Fair value gap, fair value gap. That's actually a Venom model. So we could definitely see some measure of movement to the downside now. Okay. Macro in 2 minutes. So whenever you see some kind of consolidation before a macro, no, that's not a consolidation right before the macro. That's just a whole entire session full of consolidation. Okay, but usually if you see like maybe price consolidating before the macro for like 5 to 2 minutes, so if you see some kind of sideways movement or consolidation at maybe 10:40 for example, or 10:35, when the macro starts at 10:50, that's when you can expect some time of movement. Okay, so macro usually starts loosening up the market. Okay, that's a breaker. Low, high, low, low. Now, if you if you want to see, or if price is bearish, it should stay inside of this fair value gap. Okay, it shouldn't reach all the way up high into this fair value gap. So this would I would prefer this one to stay open if we are bearish. Okay, price trading all the way up higher into this fair value gap definitely decreases the likelihood of price still moving lower. So whatever. Maybe price just is stair stepping higher. Oh yeah. Mm. So in those types of scenarios, you shouldn't be wanting to short from this fair value gap. Of course, it looks beautiful. We have a nice clean price run to the upside, taking out buy side. Okay, and then a market structure shift lower. But we are still inside of the upper half of the opening range gap. Okay, we have this shitty ass price action before. Okay, and the macro starts here at this open, okay? So if we are, or if we were bearish, okay, and the macro starting here, actually that should be the open of the macro, and just you should expect maybe a little wick higher, but you should expect or want to see immediate reaction to the downside. Why? Because is there a volume imbalance? No, okay. So that would have been the fair value gap, okay? So, and if we are bearish, or if you want to see weakness, you want to see price staying in the lower half of this fair value gap, okay? It could wick higher, maybe hitting also the opening range gap higher, but only the wick, the body should stay below, okay? That would be maybe confirmation that we are more likely to see even lower prices. Now, that's still not an entry opportunity for me because, in my opinion, we are nevertheless inside the upper half. Okay, if we would have seen a reaction to the downside, maybe what I would have done is if we would have seen a close below the opening range gap and then a retracement higher, maybe into a fair value gap that it would have formed, that's something I would have wanted to go short from, okay? So the opening range gap kind of acts like how do you say? Like I told you in the beginning, as long as price is above it, we are more likely to see higher prices. And as soon as price comes below it, and even below the first percent fair value gap, that's when you can expect lower prices, okay? And price at this point in time was just still not showing too much of confirmation they want to go lower, okay? That's just essentially what I'm saying, what I'm trying to say. So, yeah, don't always try to go short or buy at the first opportunity. Let price confirm order flow in your favor and then go short. Okay, you don't want to react to price. Okay, that's just more or less, if you go short from here, that's just reacting to price. Why? Because, bro, the fuck are you doing? You have this whole entire session of bullshit price action, which just looks like manipulation, okay? Why do you want to go short at the first opportunity where price is moving more, I don't know, not as ugly as here, okay? That's just the first price run to the upside and first price run to the downside that looks good, okay? So we still had this type of manipulation, okay, during the entire session. So I don't know, you have to weigh out the likelihoods of price moving lower at this point in time, which I don't know. If you see this and this at the same time on one screen, bro, I don't know if I would be wanting to take this trade. No, 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 no. You have so many more trade options, trade opportunities tomorrow or later in the PM session. So just be patient and wait for a high probability setup. This doesn't look like a high probability setup, at least not to me, okay? So, at least not to me, it doesn't. Eleven a.m. and 30 seconds, I guess. The session's over. Yeah. Quick summary of today's live stream. I don't think it's necessary. We predicted a nice little scalp in the beginning. I told you you could have taken this trade. I did. The only reason I did not take this trade is because we had 10 a.m. news, and yeah, I was rather wanting to wait for the macro, but yeah, would have been a nice little scalp like this. Um, yeah, the rest of the session was just useless, I guess. So yeah, I don't know how you should have been, how people got out of this session profitably. So I guess that's the only trade that I would see that would make sense. Yeah, this price run is kinda, yeah, but bro, who wants to go long maybe from here when you had this kind of price action before, okay? So it doesn't make much sense for me at least to go long in here. You also have no fair value gap, nothing. Okay, maybe somebody out there, I don't know, saw a buy signal, but I guess most of the traders out there got definitely chopped up and thrown around this New York session. So yeah, be happy with not taking any trades. As you can see, you didn't miss anything, okay? So yeah, I guess guys, that's it for today. Boring session happens. But I guess we see us each other tomorrow. So yeah, good luck trading. Be safe, guys, and I catch you in the next one.